What's up, guys? Happy New Year's and welcome to video 5. In today's lesson we're going to be discussing notional values, leverage, margin calls, order types, and a little bit of risk management. Before we get into that though, I want to do a little review with you guys. So as we've discussed, currencies are traded in pairs. When you go into a trade, you are simultaneously buying one currency and selling another. In this example, British pound versus the US dollar, if I wanted to buy one British pound, I would have to pay 1.5226 US dollars. If I wanted to sell a British pound, I would get $1.5226 in return. Make sense? So if you buy a pair, you're looking for it to go up in value, and then you are selling it at a higher price, and the difference is your profit. If you sell a pair, you are looking for it to go down in value, and then you're buying it back at a cheaper price. So you'll have more, and that's your profit, okay? So as we said, currencies are quoted in two prices. You have the bid and the ask. These are typically the best price that you can either sell for or buy for, okay? And then the spread is the difference between them, and that is the broker's commission. So if I'm entering a long position, I'm buying, okay? Longing equals buying. If I'm entering a short position or shorting, that means I'm selling. A bullish trend is when the trend is going up. The bull is pushing up. Bullish up. Bearish is going down. The bear is mauling down, okay? Bearish down, bullish up. Bearish down, bullish up. Remember that. So pip is the value by which the value of a currency either goes up or down. It's a very small number. It's fourth decimal after the point. So in order to take advantage of maximum profits, you have to trade larger lot sizes, okay? So actually write this down, guys. You should be taking notes throughout the whole thing, but write this down. This is very important. When you are entering a trade on MetaTrader 4, the value of a trade that you are going to enter is not going to be, say, 100,000, you know? In Forex, a standard lot equals 1.0. So when you're entering a trade and it says buy 1.0 or sell 1.0, that actually means 100,000 units, okay? 1.0 is standard. 0.10 is a tenth of a standard lot. So a mini lot is 1/10. So that is 0.10, and that's 10,000 units. And then a micro lot is a tenth of that. So 0.01 on your platform, 0.01 lots equals 1,000 units. Make sense? Okay, write that down. So as we said before, every pip that the value goes up or down, if you're trading a standard lot, that's $10 that you either make or lose. A mini lot, that's $1 that you either make or lose. And then a micro lot is 10 cents that you either make or lose per pip, okay? So now keep in mind the value of a currency can change even thousands of pips a day. So again, standard lot equals 1.0, it's 100,000 units. Mini lot, 0.10, 10,000 units. Micro lot, 0.01, 1,000 units, okay? That's very important, guys. So now, okay, so say I buy 10,000 British pounds. So that's 0.10 lots, 10,000 British pounds. And then I buy 10,000 euros. So 0.10 euros. Although the values, the lot values of those trades are the same, 10,000 units, the actual value for me is going to cost different for each pair. Makes sense? Because the euro and the GBP have a different worth. Makes sense? So if I'm using dollars to buy these currencies, it's going to cost me a different amount of dollars to buy 10,000 British pounds than it will to buy 10,000 euros. That is called the notional value, which is the actual value that you are spending, okay? So if I was to buy 10,000 British pounds and current market price is 1.5 US dollars per British pound, 10,000 British pounds is actually going to cost me 15,000 US dollars. Make sense? Same with the euro. If I was going to buy 10,000 euros and current market price is $1.0950 for every euro, if I want to get 10,000 euros, it is going to cost me $10,950, okay? So even though I'm buying a mini lot on both, the actual value of that mini lot is different, okay? Very important, guys. Let's talk about leverage. So you've probably heard me talk about leverage a couple times before. What leverage means is that a broker will loan you more money than you actually have in your account. So in the United States, I believe we're regulated to 1 to 50 leverage is the maximum that we can get. And that means that the bank will loan you, or your broker will loan you up to 50 times the amount of money that you actually have in your pocket to use for trading. But I've heard there's places in the world where you can have up to 1 to 1,000 leverage, which means that for every $1 that you have, your broker will loan you $1,000. So you could trade $100,000 standard lot with just $100 in your account. Isn't that crazy? With 10 pips of profit, you would double your account in 5 minutes. It's crazy. Okay, so for our example, though, we're going to use 1 to 100 leverage to make things easier. Okay, guys? So 1 to 100 leverage would mean that if I had $1,000 in my account, I would be able to trade standard lots, which is $100,000. So that means that all my wins would be exponential. My profits on my account would be as if I had $100,000 in my account and not just 1,000. Okay. However, losses are also exponential with leverage. So that's why you need good risk management and you need a good technical strategy so that you can execute good trades and you can use leverage to your advantage and make maximum profits, okay guys? And that's why we're going to learn this. So let's talk about margin. When using leverage, your margin is the minimum account balance that you need in order to hold the trade open. So if I have, okay, so say I opened a standard lot. I opened a $100,000 trade. In order to keep that trade active, I need to have at least $1,000 in my account, okay? The second that my account goes below $1,000, I hit my margin call. And what your margin call means is that when your balance goes below your margin, it closes you out of the trade, and that is considered a losing position, and your losses are final, okay? So you never want to reach your margin call, which is why you need to have good risk management and understand how much you're willing to risk per trade, okay? Let's talk about order types. So in Forex, there are a handful of different market orders that you can place. Orders that you can place. The first being a market order. What a market order is you hop on MetaTrader, you want to go into a trade, you hit new order, and then you either buy or sell at current market price. That is a market order. A pending order is, say you speculate future price action and you determine a good entry point at which you want to go in. You set a pending order at the price level in which you want to go into your trade. And when the market hits that level, it'll open your trade, okay? So that's a pending order. Now a stop loss order, I've told you guys about the stop loss tool before. It's a great risk management tool. Basically, when you are in a trade, you can determine the maximum amount of money that you are willing to risk, and you can set your stop loss at that price. So basically, if the trade goes against you and the price hits that stop loss point that you set, it pulls you out of the trade and you controlled how much you lost as opposed to wiping out your account. Make sense? Risk management. So the good thing about risk management is that you're able to control your risks in a systematic manner. The stop loss tool allows you to control the maximum amount of money you are willing to lose per trade. The good thing about the stop loss is that it is a 100% controllable factor. Now, because of this, your fear should never kick in because when you enter a trade, you are prepared to lose that much, okay? So, this is why it's important to have a very good mentality because trading is mainly psychological, okay? Trading is mainly psychological and it is driven by emotions, it is driven by fear, and it is driven by your mindset, okay, and how strong your mind is. It is mainly driven by fear and greed. And in the next lesson, I'm going to discuss trading sentiments and trading psychology because it is very important for you to keep a strong mind and a good strategy in order to succeed in the markets, okay, guys? Your mind is your most important asset, not only in the markets, but in real life as well. So yeah, we'll talk about that in the next video. Also, since you guys are new, When you're actually trading your real money, I recommend that you risk between 1 and 4% of your account per trade. You can use leverage on that, but I just recommend that because say you're risking 1% of your account per trade, that means that you would be able to lose in 100 straight trades to wipe out your account, okay? Basically, the less you risk, the more you are able to stay in the market if you lose, okay? So very important as a beginner, risk small amounts. So when we trade, it is important that we always use a stop loss. Every single trade, you have to set a stop loss and determine the maximum amount of money that you are willing to lose per trade. Because one bad trade that is poorly planned can wipe out your entire account. So you always have to be prepared, okay? So you have to consider trading a business, not gambling or betting. When you're trading, you are going to analyze it technically and speculate, okay? You can never just bet. You can't just assume that the price is going to go in one direction. You have to analyze it, and you need to have a mechanical way of analyzing your trade, and you need to have a reason why you are speculating that it is going in that direction. It can't just be, oh, you feel like it's going to go down or you feel it's going to go up. No, you need to be technical, and you have to consider it a business, not gambling, because if you gamble, you become a degenerate and then you lose everything, okay? Because it becomes an addiction. We never want that. We want trading to be a business for us. So it's important to not overtrade. If you've already had a profitable day, know when to get out. It's better to win a little than lose a lot. So that's very important right there, guys, because say you win $300 today, but you start finding really good trade setups. Well, you know what? You've already made $300. If you're going into more trades, you are risking the profit that you've already made. So you know what's going to happen? You're going to go in, you're going to lose, then you're going to try to make up that loss, and then you're just going to keep losing. So you have to know when to get out, okay? You have to know when to get out, just like any other game. So in the next video, we're going to be discussing sentiments of trading and trading psychology, as well as how the emotions tie into trading and how important it is to have a strong mind when you trade, okay? Most of trading is psychological, so it's important that you have control of your emotions and that you are able to analyze things mechanically, okay? So I'm going to introduce you guys to that, as well as the different types of analysis, okay? So we're going to be looking at 3 different types of analysis, and we're going to start out with technical, okay? So be on the lookout for the next video. And also, if you guys are interested in seeing the Cartel Invictus apparel that we just picked up, we just got some hoodies, shirts, and crew necks in. I'm going to be adding a clip at the end of this video, so check that out. Peace, family. Love you all. Hey, what's up, guys? I'm just hopping on to show you guys this sick Cartel Invictus apparel that we just picked up. We've been talking about having a clothing brand for a while, and we're very excited to launch it as we're launching the Invictus Academy so that we can all rep Cartel Invictus. So first we have the t-shirt design. I think it looks very clean, and it features a right sleeve patch. So here we have the crew neck design, very much like the t-shirt design, and it also has the patch on the right sleeve. So here we have the first hoodie design, and we're going to be offering these in zip-up style as well as pullover style. So here's the back of this. And then here we have another example of the hoodie design on a different color. I think this color looks really clean. And then there's the back of that. Now for the ladies, we're also going to be offering some design. Candace, can you come here? Okay, so for the ladies, we're offering this crew neck design for now. And very soon here we will also be offering ladies cut t-shirts as well as v-necks. Also, I plan on giving most of these away to you guys, my future students, but if you want to purchase any of these items that I just showed you, you can contact me, and the t-shirts will be $15, crew necks will be $20, and the hoodies will be $25. That's men's and ladies, okay guys? Have a good day.